This is the December market update for Washtenaw County. And in Washtenaw, the market in December and first half of December and in November really looks the same, much the same as it was in October and a little bit into September, in that we've got a market that is slowing down a little bit. Still strong demand, it's just slowing down compared to peak. If you look at the median sale price for Washtenaw, it actually, in the last few months, has been under 2%, and that's a little misleading, because in the slowing of the market, and I use slowing not in the negative term, but in slowing, again, to more to normal, the upper end markets have been settling the fastest. So what that does is it causes the median price to drop faster than probably the appreciation rates really are. We think that the appreciation, underlying true appreciation rate for homes is probably closer to 4%. And again, maybe a little slower in the above $500,000 market, and a little higher in the under $500,000, but in general about 4%. The month supply of inventory, which is the number of months it'll take to sell off the current inventory at the current rate of sales, has declined a little bit. That's good news. It's positive news for sellers at least. That shows that inventories have settled down a little bit and sales probably have increased a bit. And that's true in the last month or so. But actually up until November, listing inventories have been rising for 7 months straight. So we saw the first change in November of a slowing of new inventory coming into the market. But in general, we expect inventories to continue to rise. We expect sales to continue to be pretty strong, but again, as we said, I think last month, a caution to sellers, you'll probably feel like the market is a lot slower than it is because you have more listings in the marketplace. You may have more buyers, but they're not as plentiful as they are the more listings, so you have a showings of buyers per listing going down. So it'll feel a little bit slower for sellers. You probably therefore won't see as many multiple offers as we have been seeing, and the market will settle a little bit. But what we're seeing going into the year is really all good news in terms of general economic momentum. And we looked at some numbers nationally that certainly affect Washtenaw County and Southeast Michigan in terms of where the trends are going. One of those is household net worth. And you'd be surprised to know that household net worth is actually higher now than it was 2007, which was the peak, prior peak before the recession. Now that's a combination of everything in a household that has value, but mainly it's stocks and bonds and real estate. And most of that value increase is real estate equities. Now what does that mean for real estate? It doesn't mean that people are going to rush out and buy lots of homes, but it does mean that it raises consumer confidence. And as consumers are more confident, as their household net worth and their value of what they owe versus what they have in value gets to be more comfortable, they do tend to spend more. And the better that is, the more they tend to spend on higher income or higher value items like housing and auto and those types of things. So we think that's pretty good. Also, following that same trend is the number of jobs in the market. The number of people employed in the country is higher actually than peak 2007. It's risen above that off the recession. Now, the makeup of those jobs now aren't as strong as a makeup as they were 7 years ago in 2007, but nonetheless, even at more service industry, maybe lower paid positions, we're still seeing the usual combining of dual income families, and those combinations are still home buyers, and we're seeing that translate into additional home sales. One of the other things that we expect, we look at where's the pent-up demand and has it really been released, and we do think a lot of it has been released, but if you look at the number of homeowners across the country, it was rising very steadily up through about 2006, and then it's flattened off and actually gone down a little bit. And this is the actual number of homeowners in the country as opposed to the percentage of people who own homes, has actually settled. And we think that'll come back around. That's settled because of economic reasons, but one of the core drivers of that is a whole bunch of people who used to be able to afford a home could not. They're renting now, and we think that that demand will be released because the surveys that we see show that those former owners, now renters, all want to own again the first chance they get. The same line follows with first-time home buyers and ownership among young adults. That also has declined. It peaked at about 40%. It's down around the low 30s now. Same surveys say the same thing. Although those young adults now have challenges buying homes, student loan debt, mortgage lending standards are tougher, but as the lending standards get a little bit back to normal, we'll see that that will be released as well. We don't expect first-time home buyers to reach up to that 40% level again anytime soon, but bouncing up off the low 30s into the mid 30s probably is what we can expect. So we think the national headwinds for the economy, for the real estate side, are probably minimal compared to the tailwinds, which are what I've just described. The trends for the growth of the economy are pretty good. So that translates also to good news for Southeast Michigan, and particularly for Washtenaw, because Washtenaw tends to outperform the rest of the Southeast Michigan counties, and really outperform Michigan in general in terms of job growth and income growth. So we're very optimistic going forward that this is a multi-year recovery in the marketplace, and we think that there's some good momentum going into 2015 as well. So maybe a little more plentiful list of inventories for buyers. They'll have a little smile on their face, but sellers will as well, because values will still continue to rise. So we're looking forward to a good 15. Thanks.